Hello, YouTube. Is it just me, or does the market seem like it's bipolar lately? Or maybe there's something happening under the surface and why we're hovering here at 445. Maybe it's that there's 3.4 trillion reasons why the market is getting really choppy today. 2 trillion reasons in the morning and 1.4 trillion reasons for the afternoon. Fear and greed is actually here at 53, which is telling us a different story as well. And what's happening? Well, it's quad witching or quadruple witching, which means that we have multiple expiries for different products happening at the same time. It only happens 4 times a year, and it's happening on the third Friday, which is today, the 15th. So let's go through and see exactly what's happening. Because if we can understand what this does to our charts and to our stocks, maybe we can get a good grasp on where we should go from here. What I first of all I want to note is that, man, everyone wants to talk about SPY options. Man, who cares about those? It's $225 billion. Look at the SPX. In the morning, it's 1.9 trillion. In the afternoon, it's 290 billion. It's way bigger. Non-SPY ETFs are 350. Single stocks like Apple, Tesla, Nvidia are 555. So because fear and greed is not actually ticking down all that much, that's why I'm calling it a trap. I know I've used that word a lot lately, but I really do believe that this is a trap because this event only happens 4 times a year, and we often get artificial price action on these. Let me just give you a quick example here. Let me remove all my lines and go back really fast. Let's see whether or not we're hovering around round numbers. 445. Okay, that seems like a round number. Okay, for QQQ, we got about 370. Ah, that seems like a round number. What about Apple? Oh man, 175. That's like a round number. What about Bill Microsoft? 332.50. Ah, that's like halfway between 330 and 335. What about Google? 137.50. That's halfway between 140 and 135. Man, it's like there's almost some kind of system happening here. Amazon, 140. Nvidia, 440. We look at Meta, 305. And then we got Tesla, exactly 275. Is it any real surprise? No. This happens 4 times a year. If you're new to watching this, it happens all the time. There's $500 billion in these single stocks that are expiring today. And then for all the other ETFs, it also matters. We look here to a lot. Let's just look at a couple more really fast here. XLU at 65, XLK 170, XLF 35, the Russell 183.50, the Dow 3475. Man, it's like there's all these round numbers. Maybe it's that 3.4 trillion reasons why that's happening today. Let's go through and understand this a little bit more. So to understand the single stocks, but to better understand how the broader market's happening, what we want to do is see what's happening since the last expiry, but also in the last 3 months. Why? Because the way to burn premium is to go in the opposite direction of the 3 month for the quad witching. But we're going to focus on the last 30 days because there is also that monthly expiry. So have a look here. Man, it's pretty green everywhere. So if it's pretty green everywhere, what that means is that on the one day, we should see it all red. Ah, there's Mr. Red, our old friend. He is right here. And before we go further, I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really, really appreciate that. A small thank you goes a really long way, and I really appreciate all of your support. So in my opinion, if we're only looking at one thing, which is the charts, we might be getting a different story than if we look at the heat map to understand what the motivation is. There's 3.4 trillion reasons why in the last month these stocks have done well. Look at Amazon, right? Up 2.8, Tesla up by 20, Microsoft up by 3, Apple's down by 1. And that's the interesting part, is that Apple's actually not doing all that bad. On today, it's down less when there's actually a negative headline for Apple. Apple iPhone 15 Pro Max delivery slipped to November in sign of demand. So in sign of demand, that's good, but delays are not good. So some users experience issues ordering models at the outset. So it's a little bit of a double-edged sword, but usually they like having these sales going around for September or October, which means back to school. So you can buy them going into the holiday season as well. US and China see delays until November for Pro Max models. So double-edged sword, a little bit tilted negative. And if we look here as well for that Jensen Huang, man, he sold $70 million worth of stock, but that is a drop in the bucket compared to the 3.4 trillion. So maybe he knew what was happening here. Maybe he knows what quad witching is. Maybe he's a smart guy, and he managed to sell higher than I think people might have thought he would be able to. So it's pretty interesting. And that's really what I wanted to present today. There's also one more thing I want to go through, which is that we want to be very mindful that it's currently September 15th, which means we want to be mindful of weekly charts, but also of monthly charts. So I want to go through a couple here really fast, just to make sure we understand what the market is really doing. On the daily chart here, Man, I don't know if the 50 DMA is support or resistance. We draw the line across here, days above, days below, back above, back below, back above, back below. Man, the market's bipolar right now. I don't know. Normally it's predictable. This time it's not. But we can clearly see a push pull happening off of this area. So, in true fashion, they pump it up yesterday to burn the puts. Today they're dumping it down to burn the calls. That's what normally happens going into quad witching. There's only 3.4 trillion reasons why they would do that, by the way. And look how that 445 is acting as a magnet. Why? That's probably max pain. So we look here to the weekly chart, false break on the breakout here. Why? We got a 2 cent weekly higher high last week to 451.06. Here we got 451.08. So we got a 2 cent higher high, but it's a failed breakout. So we have the higher high. So we have to adjust this number here to 4. And we got 4 higher lows and 1 higher high. If it holds for now, we have to hold 442, which I think it will. So the weekly chart is still pointing up. It has that inside bar. It's looking a lot more like what I thought would happen on the weekend, but I also thought we were going to tank. So what's equally impressive here is that they actually did not tank the chart. We're actually holding the low. And when we look here to the monthly chart, let's actually pop over here to SPX for a different view because we have a 1, 2, 3, 4, 5-step recipe that I don't see anything that's not breaking yet. We're halfway through the month, and we still have about another, call it roughly 2%. If I look here, let me just see here. So we got about another roughly 3% in downside for us to go lower. One more thing I forgot to mention is that if we look here at SPX, SPX is down by 0.8%, but S&P is down by 1.1. So like, what's going on, Justin? Well, it's this little thing down here called the dividend. So we click on this and we note that there's a $1.58 dividend being issued today. Why? Because the S&P returns a yield of 1.45% when the SPX does not. There is no yield on this. This is the index. So the ETF replicates the index, but it also provides those dividends. So if you're only looking at SPY, you might be getting a little bit of a deeper reaction than was what is actually there. The next chart I want to look at is going to be QQQ. Why? If we go here to our daily chart, man, there's nothing that's really broken yet. We're getting one daily candle close back below, but it's really been holding up. It's been holding up really well here. And as we noted in the last 1 month, it's really been tech, which has been advancing. So I would have thought they would try to drill this thing more. On the weekly, inside bar, we have a lower high, higher low, right on the uptrend, which means next week as we open up the candle, we have a decision to be made. Are we going to be going up or are we going to be going down? We're also battling for that 375.66 area, which is exactly to the cent where we open the week, and it corresponds with our 78% retracement here. So that matters. And then looking here to our monthly, let's flip here to a line chart because I think this kind of tells a story where we just look at the formation. We try to understand that there's some kind of psychology here. Where the bulls are, well, definitely some performance chasing. I think a lot of bears are really capitulating. That would be one thing. And then we also note that people are performance chasing. I'm noticing it. Maybe you are too. So I don't really see anything quite yet, which invalidates my thesis for where we could go from right here. But I will have to go through and provide a different update on the weekend in terms of where we could go. But I do have a mathematical thing I'm looking at for us to be able to actually advance here. If you're not already subscribed to the channel, I would really encourage you to do that. But if you want to come hang out with us for the final hour, we will be live. And we're going to talk about whether or not you are ready for the trap, meaning that $3.4 trillion. Maybe there's some artificial price action, and we're going to go through all of that today. If not, I encourage you to watch the weekend video now queued up here on the left-hand side. Thank you very much for tuning in, and I look forward to seeing you on the next video. Thank you again.